Hey everybody, it's Yasha Saba from Sky Unlimited Legal Advisory, and this is our Thursday Ask Me Anything. Sorry, my voice is a little hoarse. It was my birthday last night, and I've been presenting over the last 2 weeks, so my voice is deteriorating little by little, and I have another presentation to do later today. So we're going to try and make this work, hoping for the best. Here we go. Can I update my policy and name a non-member family not biologically related to me? Wow, this person's all over the place. Hold on 1 second. Oh, okay. This person has a life insurance policy and they want to know if they can put a non-biological family member on as beneficiary of their life insurance policy. I do not have a trust or will. I have a policy and I want to name my partner as the beneficiary. My girlfriend and I are not yet married, together for 6 years. I'm 25, she's 24, but I want to name her as a beneficiary to secure her future. My family members have their own wealth and understand my decision. This is really good. You can technically name anyone you want as a life insurance policy beneficiary. There's no restrictions on that. Some life insurance policy providers do create their own restrictions, but in America in this day and age, that's actually pretty rare. And anyone that is a beneficiary of your life insurance policy, they are going to receive the death benefit upon your passing tax-free. So that's really huge. Life insurance can solve so many problems. The downside is it's just expensive if you can't afford it. But that's something to consider. Next question. My father died over 15 years ago in Florida without a will, and my cousin started using the property as her own. I live in California and she won't discuss it with me. Is that my property, and how do I get it returned to me? Wow, this is very fascinating. That's a fun question to have. So if your father died without a will, obviously the property's in Florida, so it has to go through probate in Florida. That's going to be expensive. It's a public process, and that's really the only option by passing it down over to you. Technically, you are the heir to your father, and I'm assuming you have no brothers and sisters, so no other biological children. So your cousin's kind of living in there. If you probably go right now on the public records, you'll see the title to the property. The deed is still under the father's name because no one's done anything about it, unless your cousin has opened up a probate and said there are no other family members and the cousin's the only heir. This kind of stuff, this funny stuff, it's like Jerry Springer, does happen. And it's fraud. They're lying to the judge in the probate court, and you can totally reverse that. So what I recommend you doing is just first go verify the title of the deed. Send me an email, give me a question. I can verify that in 2 seconds. You can go on the county record website. This is all public stuff, and you can go see whose name is on the title of the home. If it's still your father, even though this was years ago that your father passed away, about 15 years, open up a probate. That's the only way to pass the title of the home over to yourself, claiming yourself as the natural heir of your father. And then you can take in, right once you have title to the home over into your name, you can then follow eviction procedures to evict your cousin. But remember, your cousin's been living there for quite some time. I don't know Florida landlord-tenant law, that's basically what you'll be in. So I don't know if they have a right to stay there for a certain period of time or whatnot. You might have to hire a Florida attorney to help you out. Next question. If my mother gifts me her house and uses IRS Form 709 on this year's taxes, and if she passes, can the IRS come after me? So I don't know IRS Form 709. I'm not a tax attorney. I know tax consequences here and there and stuff like that, but I'll just focus on your question. If your mom gifts you her house and she passes, can the IRS come after you? After you for what? For the gift? Well, your mom has an exclusion amount of $11.2 million that she can give to anyone she wants within her lifetime without having to pay taxes on that, paying gift taxes on that. So I don't think the house is worth $11.2 million, but you tell me if it is. Let's be best friends. Hey, I want to hang out. But if she gifts you the home during her lifetime and she hasn't gifted more than $11.2 million throughout her lifetime to anyone else, then it's an excluded gift and it's totally kosher. The downside, though, is she's gifting you the house. That means you have the cost basis of when she originally bought the home. So if you sell that home, you're going to have a nice little capital gains tax over there. If it's over $150,000 in gains, if you're married, the exclusion amount is, $300,000, $150, you and your spouse. So that's not too bad. Mom will be 90 this month. Okay, so she hasn't passed away. She's in pretty good health, but may need some in-home assistance or go to an assisted living facility at some point. This is really tough. Hopefully, I'm assuming mom has no more assets, right? It's, in my opinion, for your sake, it's always, always, always better for children to inherit homes from their parents. Granted, I understand the downside of this when you want to apply for Medicaid, or if you're in California, Medi-Cal, and need-based government aid for your long-term care or your health care. And these government organizations look at the assets that you have and they calculate, okay, do you have too much money where you don't qualify to receive these aids? So what a lot of people do is they maneuver assets around among family members, among certain trusts and that kind of stuff. A lot of this stuff has to be done proactively years before you actually need the aid. And then they try to qualify for aid from there. I would look into, there's a type of attorney as well as consultant. You might not have to hire an attorney for Medi-Cal, Medicaid planning, so that you can see what kind of exemptions your mother falls on. There are personal residence exemptions, but it is up to a certain amount of money. So this all kind of hinges on what's the fair market value of mom's home, okay? If she qualifies for the exemption where the value of her property is not actually counted, is not under her total, like this is how much money, her net worth she has, then that's good. And she might still be able to keep the house and still qualify for government aid to support her health care and possibly long-term care. And then that way you can inherit the home, because when you inherit the home, the cost basis of how much mom originally purchased goes up to the fair market value at the time of death. This is huge. What that means is when you inherit the home, if you sell it, there's no taxes. But if she gifts you the home now and you sell it, you're gonna be paying gains tax on what the difference was when she first bought the home, however long ago, which I'm assuming if mom's been living in it for a while, maybe 10 years, 20 years, the property values, especially here in the Bay Area and in California, have most certainly gone up 100% or more. So something to keep in mind, that if you're doing planning with your mom, this is something you want to consider. Should she gift it to you, or is it possible that the home will be exempt because it's within the limits that the government sets, and the government there's different standards for California Medi-Cal, different standards for Medicaid. So that is something you need to look into. I would start Googling those, the exemptions. Google Medi-Cal, Medicaid exemptions when calculating assets. All right, everybody, I don't want to strain my voice because we do have an event coming on later today. So I will see you all next week. This is Yash Asaba at Sky Unlimited. Send me your questions at info@skyunlimited.law. Take care.